I'm Cesar Delgado from Back Roads of Illinois podcast. Welcome to the show with us. I am joined with Jack Scoville from the Price Future Group. How are you today? Jack, welcome to the show with us for today.
Well, thanks for inviting me. I'm doing well, and I'm happy to be here talking to you.
Let's start with this World Agricultural Supply and Demand Estimated report on next week. Could you explain to the farmers on it the government is not shut down for this moment?
Well, that's true. The government has stayed open through an act of Congress here, signed by the president, for another 40 days now or so. And so we will have the reports released on time, and that includes the WASDE reports next week, which is the report you're referring to. I expect that we'll see somewhat lower production estimates for U.S. crops, corn and soybeans, just based off of yield reports that I've been picking up from producers throughout the Midwest. So hopefully, I kind of expect USDA to leave the demand side alone this time. They made some unusual moves last month on the demand side, especially in soybeans, by cutting back soybeans demand, which I'm not sure is really warranted. At any rate, I think they'll leave the demand side alone this time. And that should result in tighter ending stock scenarios, which should help support soybeans especially, and to a lesser extent, corn. The other thing to look at is the world estimates. I don't expect any real change in the South American estimates just yet, except for maybe in the wheat. Wheat production could go down in South America because of drought, and also in Australia because of drought. Also, wheat production here is known. Canadian production estimates have been a little bit lower than what USDA has been showing, so USDA could cut there, and could cut Western European production as well. Really, the only country.
Could you explain to the audience about the grain quarterly report last week?
Sure. The report was considered a little bearish to the markets. Actually, the corn stocks estimate was below the average trade guess, and should have had more positive implications for price action. But the wheat and the soybean estimates were a little above trade estimates, and so the fact is that the soybeans and wheat went down and took the corn with it. Quarterly stocks for September serve as the ending stocks for the 2022 crop year. And now we're in the 23-24 crop year, and those quarterly stocks become the beginning stocks for the crop year this year. So that's the importance that this particular report holds to the market. The good news is that the USDA estimates were not really very far from the trade estimates, so they didn't produce a real extreme reaction, but they did produce somewhat lower prices. I think that's factored into the market now, and now we have a base level from which to rally.
Yeah. Now, how is in the livestock market for today? and hog markets?
Well, the cattle was a little bit lower. There's a lot of concern about the U.S. economy and high beef prices. That the consumer may stop buying as much beef as they have been buying. So the trends have just started turning down this week in the cattle market, and in the feeder cattle market, having the corn price perhaps rallying is not helping the feeder cattle market out either. But the big thing is how is the demand for the beef going to hold up with these high prices? And there's a lot of concern that
Finally, what is your estimate of the yields from this year's harvest season?
well, I gave a corn yield estimate around 170 bushels per acre. I think that'll work out pretty well. We'll see. It's still kind of early in the harvest period for corn, at least picking up on harvest trends. And it's, as I say, it's really not much of a trend showing it just yet. And for beans, yields overall have been said to be kind of disappointing. I'm kind of dealing with something around 58 to 59 bushels per acre. I think that'll work out pretty well. So,
is there anything would you like to go to tell the audience on the crop conditions and cash market for central Illinois and Iowa as well?
Yeah, I expect higher prices to develop sooner rather than later. And I think most producers are content to hold on to their crops until they see higher prices. So I think the market's getting rather tight right now. Demand is going to be a problem all year round. So as the futures rally, we may see the basis cut back a little bit. So I would, if I was to sell anything, I would probably sell basis now and look to price my futures at a later date.
Thanks to be here on the show for this afternoon, Jack.
Well, it's been a pleasure. Thank you.
This is Jack Scoville from the Price Future Group in Chicago. This is Cesar Delgado from Back Roads of Illinois podcast. Have a great day. Bye.